Golden cross achieved once again. Does Bitcoin have the potential to break out even higher after this? I've prepared hard data for you that answers these questions. Are you curious about them? Let's get started. Hey, welcome to another episode of Crypto Market Analysis, where, as you already know, we meet every week to analyze Bitcoin, Ethereum, and an altcoin chosen by you. And today is going to be something completely new. We're meeting up, and for now, we're looking at the charts from 3 different perspectives. Why for now? Because most likely a 4th perspective will be added soon, but that's going to be a surprise. At the moment, we're looking at the charts from a technical on-chain perspective, and of course, our outstanding fire chart. We know you appreciate that. The fact is, you can't find such condensed analytical knowledge anywhere else online, because we're really getting a lot of subscribers. Thank you for that. But I also know that many viewers or many people watching still haven't subscribed to this channel. So now is the perfect time to hit that subscribe button, leave a like, ring the bell, and drop a comment, even if it's just for the contest. And remember, the content in these materials does not constitute investment advice. This is solely my subjective opinion about what I see on cryptocurrency chart. If you agree with that, grab your coffee and let's get into the analysis. As usual, we'll start with Bitcoin. So what do we have here? New ATH, $112,000. A new all-time high that appeared very, very quickly compared to the last episode. And we can see that in the current situation, Bitcoin has been rejected and is unable to maintain the values that were peak levels just a few months ago. Theoretically, this is quite a worrying signal, because if we can't hold these values, the risk of declines increases in this case. But maybe it's actually not as bad as it seems. Why? Because let's focus on how exactly the individual candle closes look, not just the wicks themselves. I'm going to draw a line which I'll place exactly at this spot. Why at this spot? Because historically we have local peaks here. These are peaks from as far back as December 2024, as well as from January 2025. And we can see that after breaking upwards, even though the candle wicks that were pulled up here did not hold those price peaks, Bitcoin still closes its price 7 during pullbacks above those peak values from a few months ago. This is a good signal. This is a very positive signal, which is also reflected in the RSI. The RSI, which I mentioned last week, was showing a bearish divergence that was spreading between these peaks. However, this peak, the second peak, actually managed to break a bit higher on Thursday, which completely invalidated that divergence. Moreover, we can currently observe that a bullish divergence is appearing on the chart. I will mark it first on the indicator. It is here, and I'm changing its color because this is not our trend line, but simply a divergence. So here I am changing the color to make it even clearer. Here it is on the indicator at the bottom. Here it will be on the price, and we can see that the indicator is moving in the opposite direction to what is happening with the price. Of course, the way this divergence develops on the price itself is quite aggressive. This move is very strong, which may cause the divergence to stretch out and perhaps last longer. And it might even end up looking more or less the same as it is drawn now. I realize that divergences can sometimes be very complicated. Even on my Twitter, I noticed various comments saying that what I'm currently observing isn't a bullish divergence, but for example, a bearish one. That's not the case at all. Why? Because divergences are divided into regular and hidden ones. What we have here in front of us right now are so-called hidden divergences, which means that the indicator is moving downward while the price is moving up. How can you most easily distinguish such divergences? Well, first of all, let's focus on how the price lows behave in relation to the indicator's lows, as well as the price highs in relation to the indicator's highs. If they move in opposite directions, it means that the price movement is most likely going to be reversed. In this case, we can see that there is a chance that based on this divergence, Bitcoin will potentially be able to start another upward move within the next week. Well, divergences are something I personally really like, and I see a great opportunity here to look for local tops and local bottoms. If you're interested in what such divergences are, not only on the RSI, but also on volume, MACD, and other indicators, I encourage you to check out the lesson dedicated specifically to divergences at Kanga Insights. The link is in the description. But let's get back to what we see on the chart. Well, These divergences could push the price up, but unfortunately some declines may also occur. As I mentioned before, it could stretch out even further, so how far could these declines go? In my opinion, the first support level, we've basically already marked it out. It's around $106,000. The next support level, however, is around $105,000, which is this local peak marked here. Only if Bitcoin loses the $105,000 level with a candlestick showing at least a 3% drop, or if we see a double red candlestick here where one closes below this value and the next one does as well. Only then will I consider selling Bitcoin. At the moment, in my opinion, Bitcoin looks healthy and is still consolidating. Admittedly, we are dealing here with a very strong, very aggressive upward trend, which will certainly be broken sooner or later. This should be kept in mind. However, for now, there is nothing to indicate that this could happen in the near future. It's also worth considering, since we have identified potential lows where Bitcoin could break out to. And pay attention, because in this situation, we are not dealing with any potential new, especially horizontal resistance points. That's why it's worth turning to Fibonacci. Fibonacci, which in this case I use based on the trend. And here it spans this kind of trend. I found a low that occurred here in the past. In 2024, I stretched it up to the peak we reached in January 2025 and extended the Fibonacci down to the levels, to those lows we had before the current upward trend. And let's take a look at what has appeared for us. We look higher and we see a certain line. This line is at the level of 786 Fibonacci, and it oscillates around $119,000. And in my opinion, this is the bottom of a certain resistance zone, which Bitcoin will likely head towards in the next upward move if this momentum continues. Why did I determine this peak based on this low and not that one? Well, because here we saw that it was a very dynamic drop, a drop that could simply be a pricing error, whereas this low has already been confirmed 3 times. Nevertheless, I already checked before making this material that if I were to set the Fibonacci trend based on that point, the range of this move would reach $121,000. So we can confidently assume that the next move for Bitcoin could mean a rally to around $119,000 or even $121,000, which is quite good. Once again, something called a golden cross is occurring on the Bitcoin chart. What is a golden cross? It's a situation where the 50-day moving average crosses above the 200-day moving average from below. It's a highly publicized event that increases interest in cryptocurrencies, but its short-term effects can vary. Especially for you, I've prepared a summary of such events in Bitcoin's past. As we can see here on this chart, we can notice that in the short term, it was often a negative signal for Bitcoin precisely because it is a media-driven event. People talk about it a lot, which gives whales and big wallets the opportunity to simply liquidate their Bitcoin to newcomers. Nevertheless, if we look at the golden cross from a different perspective, from a long-term perspective, especially over several weeks, we can see that this indicator actually had a positive impact on the price. This means that each of the last times we had such a situation over a longer period, really over 156 days, for example, in 2023, or 329 days in 2020, or even the most recent time, in October 2024, Bitcoin truly increased in value, and these were significant gains. Therefore, in the longer term, in my opinion, yes, this is a positive signal. In particular, precisely because the rate of price growth is higher than it was in the past, as a result, these faster moving averages will over time form a kind of fan where each faster one will be above each slower one. So this is a very positive signal, a very bullish signal, at least in the perspective of, as I mentioned, at least several weeks. Bitcoin on fire charts. And here, pay attention, because things are getting denser. We can see our Bitcoin price line with buy volumes below it and sell volumes above it. And notice there are more and more of these lines appearing here. Let's take a look from the top to see what's happening here. At the level of $116,000, we can see a brightened line, which marks the point where there is quite a lot of sell volume. Here, those volumes amount to about $10 million in Bitcoin, waiting to be dumped onto the market. The lower we go, the more of these volumes we can see accumulating. 26 million at the 115 level, at 114 also several million, and so on. all the way down to 112, which is quite an important, actually the most important area, because this is our previous all-time high. Here, the sell volumes reach almost $21 million in Bitcoin, waiting to be dumped onto the market. So there are really a whole lot of resistance levels. As for support levels, some quite crucial ones appear, especially here around the $105,000 area. Well, $105,000 is the zone I mentioned during the technical analysis. We know that it is crucial. We know that it is important. Above that, let's also take a look at these areas. Here, at the level of 106, we already have almost $9 million waiting to buy Bitcoin in case of a drop. And also in the area, in this case of $107,000, we have over $9 million waiting to buy Bitcoin as well. Who is currently interested in the market? Well, we can see that the ongoing consolidation is causing this interest to weaken a bit, and there really aren't that many buying forces. Theoretically, that's a worrying signal. On the other hand, let's remember that consolidation is a natural phenomenon, which is exactly what causes this kind of investor behavior. Ethereum continues to demonstrate strength, which is really a very good sign. What happened on the chart is basically a reflection of the most likely scenario we mentioned in the previous material. That is another test of this supply zone. This gray box that we have marked out, as we know, has been there for quite a few months now. And we can see that this rebound is happening for the third time. The third time occurred yesterday on Tuesday, and as a result, we are seeing slight declines. Slight, but still, if we take a closer look, we'll notice that here, especially on lower timeframes, maybe I'll even switch to the 4-hour chart, which I don't usually do on Kanga trends, on crypto market analysis, but this time I will. And let's note that here we're dealing with a certain type of triangle. It's an ascending triangle where its peaks are marked at a very clearly defined resistance level, horizontal resistance level, while the lows are moving upward. Here we are dealing with exactly this triangle, which in about 70% of cases typically results in an upward breakout, making it a bullish formation. But there are certain factors that tell us it might not be so bullish after all, because the RSI keeps dropping. And some might say, hey, there could be a bearish divergence forming here. However, I need to reassure you, that's actually not the case at all. Ethereum is consolidating, and indeed, we can clearly see that Ethereum is dropping here, and the RSI is also decreasing. However, the the highs of Ethereum's price are also slightly moving downwards. So in this case, there is no divergence. In the previous material, we mentioned that Ethereum was facing a chance of dropping a bit deeper, once again oscillating around the 2,330 mark. But currently, looking through the lens of price action and the fact that demand is appearing at increasingly higher levels, this is becoming less and less likely. Nevertheless, if a rebound from this zone does actually occur, then somewhat deeper declines and a liquidity grab may appear. However, in my opinion, an attack on the zone is more likely to happen first. If it is successful, then in the near future, we might already be talking about this gray box that we've been observing here for a long time, starting to be tested as support. It's very clear that with an aggressive breakout, Ethereum is basically waiting to see what happens with Bitcoin. Nevertheless, we can take a look at the fire charts and see who is currently interested in buying Ethereum. So let's check the CVD first. And here we can see that practically everyone is reaching for Ethereum at this moment. The most interested are the whales, who are definitely leading the way here and are trying to push the price back up to resistance. And this resistance is very clearly defined even on the fire charts, because it's around $2,700, 2,700, which is the lower boundary of our gray box. The one we're observing on the technical chart, the altcoin that's coming into focus today is Ethena, which is basically making its debut in our crypto market analysis. Let's take a look at the chart. We can see Ethena defending certain areas, which are marked by the moving averages, the 50 at the bottom and the 100 a bit higher up. These are areas that are currently being strongly defended, and as I can see, they also coincide with horizontal zones. I'll mark them here in a moment, drawing lines, for example, here, to show that these lows we're observing here align very nicely with those previous lows. What's more, we can probably talk about a local trend reversal here, because we had a somewhat deeper low marked at this point, and now we're seeing a breakout. I would cautiously venture to say that it's quite possible we're seeing the formation of an inverse head and shoulders pattern here. This is a very bullish pattern, which typically signals a trend reversal. I wouldn't say it's a textbook example. It's not perfect, but I do see a shoulder forming here. It actually formed quite a while ago. The head, which has the potential to be called a head, is basically right here, and another shoulder, which is just finishing form. Because of this, at the end of the formation, we can expect a breakout, but the question is this really a classic head and shoulders pattern? In my opinion, not entirely, but there are certain aspects that could support the theory of a potential breakout to the upside. Now, let's take a look at the volume. When looking at the volume, it's worth paying attention to how it behaves during the formation of the right shoulder. And we can see that in the case when we were dealing with the left shoulder, the volumes were lower than those we are currently observing. A similar situation occurred when the bottom was being formed, which we refer to here as the so-called head. If these volumes increase when the right shoulder is forming, the chance of a breakout is very, very high. Breakouts from such formations can usually be determined by measuring from the bottom of the formation to basically the neckline, which is marked roughly where I currently have the cursor, that is just under 46 cents. However, I won't attempt to do that because, as I mentioned, this is not a typical inverted head and shoulders formation. It's still worth remembering that the resistance levels can appear here quite interestingly and at fairly high points. I already see such intuitive resistance at the level of the 200-day moving average, i.e. around 58 cents. This presents a chance for a really strong breakout in the case of Ethena, all the more so because on the RSI we can see that it is defending a very important area, namely the level of 50. The bulls are really taking the lead with Ethena at this moment. If you're interested in buying Ethena, it's worth taking a look at fire charts. Just remember, this is not investment advice. And I can see here quite significant volumes appearing around just under 37 cents, which once these values are reached could push Ethena a bit higher. And to where? Well, I'm glancing at the resistance levels, so we're going a bit higher. And here, in the range from 44 cents up to around 46 cents, I can see that the selling volumes are currently increasing. Will there be more of them in the near future? We'll see. If you want, maybe we'll update Ethena next week. However, it's worth paying attention to what's happening on the CVD. And on the CVD, we can see that retail investors are taking the lead. They're playing the first fiddle when it comes to buying Ethena. And interestingly, the second largest wallets are also quite focused on Ethena here. That is, wallets holding between $100,000 and $1 million waiting to buy Ethena in case of a potential dip. And they're also currently in the game. And if you'd like to bring your altcoin with you, remember, it's a very simple thing to do. All you need to do is register on Kanga. You'll find the registration link in the description of this video, and you can browse through the cryptocurrencies we have available. Let me know in the comments which one interests you the most, and remember the 3 basic rules. First, it can't be KNG. Second, it can't be any meme coin. And of course, it has to be a crypto from Kanga. So you know what to do. The comments are open. Let me know what you'd like to see next week. ETFs keep buying. Basically, you could just show this chart and say nothing else because we keep seeing green bars all the time. These bars are really very high. What's more, we can see on this white line that the amount of Bitcoin currently locked in ETFs is reaching new records. That's why the American market, at least through the lens of Bitcoin ETFs, remains very bullish. On-chain analysis. And today I have prepared for you 4 indicators, 4 so-called critical deviation indicators that we need to monitor regularly when Bitcoin is in a strong upward trend in order to check whether we might be reaching a local peak at this moment. We start with SOPR, and I'd like to remind you that these indicators you see here are described in a very simple way on the Looknote platform, right here in the description that appears below each indicator. That's why I won't explain in detail what each indicator represents every time I analyze the crypto market, because you can really access that information very easily. It's written in an accessible way, so you can just check it out there. And we can see on the indicator itself, in the case of the 14-day moving average, that the SOPR is moving upward as expected, because as we know, the price is rising. However, it's only about halfway, at least according to the indicator, to reaching the local peaks that could indicate that Bitcoin is simultaneously hitting a local price high. In this case, that's why the SOPR looks quite positive. Let's also take a look at how exactly the same thing appears on the 60-day cumulative growth chart, which is my personal FOMO indicator. Here we can see some local peaks, very similar to what we observed with the SOPR, which are marked very regularly around a certain level in this case. We see 50 So let's check exactly what level the 60-day cumulative growth is currently at. And we can see that it's just at the level of 24, maybe a bit higher, 28. In the case of those local peaks, so we can say that basically this is only halfway up on the indicator. I emphasize not on the price. To reaching a local peak, this could mean that the price doesn't necessarily have to double for the indicator's value to also double. The price, in this case of Bitcoin, could soar by 20%, and the indicator, for example, could already reach its extremes. That's why it's worth keeping an eye on such indicators. It's worth being here with me. It's worth subscribing and watching for critical deviations. The MVRV superposition indicator after halving, which is an indicator that has also been mentioned several times during crypto market analysis, where we see certain colors, the legend for which is explained here. Each individual color corresponds to a different bull run, a different bull market that took place on Bitcoin. And each time we saw that every subsequent cycle reached slightly lower value thresholds in a stepwise manner. Now, we assume that the ongoing cycle is heading towards reaching the value of 3. That is this horizontal line that we see here in this case. And importantly, it's worth noting that at the moment, we are actually still quite far from reaching 3, which means that Bitcoin still has a lot to do in order to reach the peak of the ongoing bull market. And one more indicator, NUPL, which stands for Net Unrealized Profit Loss, by special request from one of the people who commented on the previous video. And as we can see on this indicator, it's actually quite a good one, which tells us about the really hard critical deviations. Looking at it historically, we've seen these blue areas that exceeded the 0.75 level. And those were zones where Bitcoin stayed for a very, very short time, after which there were very strong rebounds. Currently, NUPL doesn't even reach, for example, in the previous bull market, the 0.75 level, but it is very close to it. It broke slightly above 0.74, but at the moment, if we look at the ongoing bull market, we can see that currently NUPL has reached a maximum value of 0.58, at least during this last breakout, I should note. However, at the present moment, it is actually a bit below that. It is also below those peaks we observed a few months ago, which reached the value of 0.63, as well as the previous one also around 0.63. So for NUPL, it really still seems like there is quite a long way to go before it can break out. Let me remind you, the critical value is 0.75, but from cycle to cycle, in my opinion, these values may be decreasing, which we can see through these local peaks that we have marked right here. We will definitely be coming back to this indicator, as well as to the other critical deviation indicator. Now it's time for the contest, and as always, let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's material, so it can be Bitcoin, Ethereum, or Ethena. Present a technical perspective, on-chain fire chart, sentiment, fundamentals, whatever you like. And remember, you don't have to agree with me. The author of the most interesting comment, posted by Friday at midnight, will receive 20 KNG from me. And the winner for the previous episode is Lukasz, who analyzed Bitcoin from a quite interesting perspective. Thank you for your comment. Please contact support to claim your prize. That's all for today. If you enjoyed it and you haven't subscribed to this channel yet, you know what to do. And please rate this episode on a scale from 1 to 212, where 1 means it's weak, bland, I don't want to see anything more. 212, well, you know what that means. If it's 212, then I'll see you next week. Bye.